Okay, so let's stay focused on trade management. Trade management indicates that because the current rise in bond yields, sterling is also rising. By the way, United States dollar against the yen is now a positive swap. This would mean that what we were just showing on the 15-minute chart, we can actually hold all the way to 120 if you're going to be a swing trader or you're going to be a more than an intra-week trader. We can hold our positions in the current leg 3. This is a wave 3, so we expect really to see 120. The longer it takes, the more money it makes, because we're going to have a positive actually interest added to our account the longer we hold that position. Also, sterling yen is a positive swap. Euro dollar is now a positive swap if you're selling the euro against the dollar. United States dollar against the Swiss franc is a positive swap, also if you're going to buying the dollar against the Swiss franc. So we'll be treating all four on that condition that you could always either buy into it short term or hold it, all right, to the projected highest target and earn positive interest rate swaps because you are holding it across time. All right, so now there's a rise in bond yields. This is what we're seeing on the trade management chart. This is going all the way to 158. It's going to 159. Remember this chart here? We were considering that it could do a head and that we're not going to be doing any shorts until we get to see 158 and 159. We were also considering that it may not even, in order to do that head, it is going to correct at the lower boundary of that ending diagonal. Well, the market is now very fast and very strong. It's not going to make that correction. It's not going to correct to the lower boundary at that ending diagonal. It's just going to drive off all the way to 159 and 160 and do a higher head. All right, that is what you are looking at here. You're not going to get these corrections. We're no longer trading a rejection at over both levels. This is going to 160 head on to do another head. Okay. So let's go now to trade management. We understand the technical picture. The market on this 4-hour chart is supported by very strong positive momentum. On the 4-hour chart, we're always above overbought. There is a wave 5 on the 30-minute and on the 1-hour chart. This is end of correction 4 at the neckline. There is now a wave 5. Ideally, if we do projections, this is going to extend to 161.8, 157. It is going to extend, of course, higher. We do these projections once we go live. All right, what this means is that we'd always want to buy towards the lower boundary of that ending diagonal and move, just like with the United States dollar against the yen, take profits exactly 138.2% higher and recur the position all the way into the breakout highs of the current month, 158.98 or 159, 160, and even 161.26. All these levels are available for the current month. All right, so the current short-term trade manifest is always to long using the 15-minute growth wave that is showing on the 15-minute chart and go to subsequent higher levels. This is for intraday traders. Okay, for intra-week traders, all right, we would also long and add all the way to the fluctuation high or an adequate pivot level on the monthly chart. So the breakout level today for this month, for this week, is 158.13. Let's check this. Currently it's 157. So what we are actually saying is that we would relate our entries to the pivot levels on the weekly chart, on the weekly pivot time frame. These are the current weekly pivots between the 3rd to the 7th of January this month and the new year. We're looking always to buy currently at 155.2 and 154.7 and go. If you were going to take this to the end of the week, intra-week trader, it's 158, of course. If you are just going to short-term trade it, then that's what you're looking at. You're looking at the same levels: 155.2, 155.43, 155.64. You just take it to 157 fluctuation high. Or why 157? It's 138.2. We actually will be implementing, this is 30-minute, we'll be taking it down to a 15-minute. On that 30-minute, we have, remember, this is a wave 5, and we have a complete segregation of 1, 2, 3, 4, 5 for that wave. There appears to be here an internal 1, 2. There's a neckline here. There's a correction back to 115, 155.75, 156. These zones are buy. We would relate them to 155.64, that level here, okay, and 156, and 155.85. These three levels. Our actual buys, all right, the stop is just below the head now, 154. We will not really do hedging, or 154.18, that is your stop here. All right, there's also possibility, sorry, it's 154.7 and 154.9. We have a stop here. If you wish to do level management, once there's a bounce out of that level, we close out, of course, our holdings on a right shoulder. Okay, so we can now go live. So the current market is a buy at 155.6, 155.8, 156.10 or 156.